Dollar cost averaging is recommended by a lot of people as a way of investing that can be very, very powerful over the long time, over the long period of any financial market. And there are definitely some benefits, but let's not just take it and run with it because somebody says it's good. Let's look at the facts. Okay, let's look at metrics. Let's look at data. So today we're going to look at Bitcoin, and just to give you kind of a realistic and almost worst case scenario. All right. So what we got here, and by the way, just want to recommend this website. So this is the website that I'm using right here. Okay, you can see that. So I have no connection with this website. I don't know who these people are, but I want to thank them for providing this data for us. And I encourage you to go ahead and support the site as they invite you to down here. All right, so you can go here and do this yourself. And by the way, they also allow you to do this with other coins. We're going to do it with Bitcoin, but as you can see, they've got all kinds of cryptos here. All right, so this is just one example. So let's say, let's do Bitcoin because that's the big daddy. And let's say that we're going to invest $100 increments, and let's do it monthly. So what that would mean is that you say, okay, you know what? I don't know how to time the market, so I'm just going to buy $100 USD, $100 worth of Bitcoin every month, and no matter what, whether the market goes up, whether it goes down, and that way you average the returns that occur over a certain period of time. So we're going to do it for 3 years. So we're starting from December 8th, 2019, and we will take it to December 8th, 2022. 3 years. Okay. So that's it. All right. So now what's going to happen is we just keep adding $100 a month. We don't even think about it. We're not trying to time the market. That's the key to dollar cost averaging. So basically, as price goes up, you get the advantage of the price increase. When price goes down, you might think that's a bad thing, but the concept behind dollar cost averaging is then you're getting your financial vehicle at a cheaper price, which, makes sense. It's a good thing, right? We want to buy low. And so if you believe in the financial instrument, then you're averaging into it. And okay, so let's see what happens. All right, so over those 3 years, you can see the chart here. All right, it starts out at we got $0. And so dollar cost average. So now you can see this chart. Let me use my arrow here. In fact, I'm going to use black because they've already got red in the background there, and you can already kind of start to see a little bit of what's happening. There we go. All right, so everything's looking good, and we're rocking and rolling, and it's going up good. So now, if I go over this, actually, I think I'm going to have to take the drawing tool off to do the crosshairs. Yeah, so there we go. So if I do the crosshairs, there we go. So by April 1st, we're doing good. So as you can see, this is April 1st, 2021. The balance in fiat, that means that's how much money, how many dollars in this case, we're using US dollars, you have in Bitcoin. So 8,496 and 28 cents. Pretty good. But we only invested $1,700. So that's 17, that's a big, that's a tremendous return. Tremendous return. So we're liking it. All right. And then if we go out, let's go to December. So there we go. So 2 years later. Now, of course, we've invested more because we're investing $100 a month. But still, we've returned almost 4 times our investment. 8,000, like what, 3.5 times or 7.5 times? I'm sorry, 3.5 times. So we're at 8,350. So really, 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 really good returns. Sweet as honey. Nice. Loving it. Loving every minute of it. So the red line up here, that indicates how much money you have in dollars of Bitcoin. And down here, the orange line represents how much you've invested, because we're still investing that same amount. All right, now, if we go all the way out here, and let me pull this over for you. There we go. So, and then let's scroll over here. So if we go to roughly where we are now, oh, it only goes to, oh, okay, well, it's going to bring us to November 22. So fine. For an example, now you can see our total investment's $3,700 because we keep investing that $100 every month. But now our Bitcoin's only worth $32.90 and 2 cents. So what the heck? We lost money. Well, that is no bueno. Are you serious? What happened? So over 3 years of dollar cost averaging, we've actually lost money by dollar cost averaging into Bitcoin. So, wow, not what we wanted, not what we expected. So in this particular situation, over this particular time period, this would have been a losing strategy. And you can see the numbers here. Let's see, yeah. So value in fiat. All right, and there's Bitcoin selling price. And there's our total investments. We invested $3,700, and so you'll see we lost 11% in 3 years here. So what the heck? I thought this was supposed to be a good way of investing. So there's 2 things to point out here. Number one is with Bitcoin, we're using a very, very, very volatile asset. So that's number one. This is not like investing in the S&P 500 or, you know, something that's less volatile. It is one of the most volatile markets in the world. So that's one reason why dollar cost averaging may not be as good. Second reason is it's a very short period of time. Dollar cost averaging is not meant to be done for 3 years. Right? It's meant to be, it's a ideal scenario for young people who are going to hold financial investments for, well, literally decades, 30, 40 years. And, you know, in something that's a more stable, less volatile market. So dollar cost averaging can be good. Not saying it's good, not saying it's bad. But I'm saying there are conditions in which it works better than others, and there's still no guarantees. But for something like this, you know, and a lot of people, when it comes to Bitcoin, get very emotional about it, very enamored, and they're looking to get rich quick. This has not turned out to be a get rich quick approach to Bitcoin. So what do you want to do? Well, personally, I always think you should know what you're doing anyway. And dollar cost averaging is kind of a blind approach. And admittedly, it's based on the idea that it's very hard and nobody can time the market. And I also agree that it's very, very, very hard to time the market. But I also happen to believe and know from my own experience that the more educated you are, the better it is. When it comes to your money, why would you trade blindly? Why would you invest blindly? I think that you should do your own research. You should get educated. When it comes to your money, be educated. And one of the things that I use for timing is my cycle indicator. And I give it to all of my viewers for free. And you're a viewer because you're viewing my video right now. So you can go to indicatorwebinar.com and I'll be happy to give you that market timing indicator for free. But it's a common indicator that's already in your charts. I show you how to modify it, turn it into a market timing indicator because it's not that by default. And then I give you about a 45-minute tutorial on the how to trade it. And that's what I use. So for me with Bitcoin, I did not just hold all my Bitcoin through this big up move and this big down move. I didn't do it with my Ethereum. I didn't do it with anything. So there's times when I look time, that's the key, time to get in, time to get out. And I'm not saying anybody does it perfectly, but I'll tell you, this tool is at the core of my trading system. Happy to give it to you for free. So if you like to get more videos like this, in fact, I'm going to have a follow-up video that's going to take this and take it to the next level. So subscribe to the channel and you'll be notified when that video comes out. And that'll be kind of a part 2 of this same concept.